Hey guys, what's going on? Jeb here, and in today's video, I am going to be explaining to you exactly why a massive breakout is coming to Bitcoin in just the next few months. Today, we're going to be looking at the Bitcoin chart. We're going to be looking at the gold chart. We're going to be looking at the stock market chart. And by the time this video is over, you're going to realize that investing in the United States stock market is one of the stupidest things that you could possibly do with your money, given the opportunity cost. You're also going to understand that the massive rally that we're witnessing right now on gold is indicative of a major rally that is going to come soon on Bitcoin, and I'm going to show you how the rotation between those two is going to be enormous. We are entering into a world where we are now witnessing the vast majority of investors start to move away from stock investing, and they are moving towards gold investing and Bitcoin investing, and if you want to be a part of that, then you have found the right video, because I'm going to show you exactly how to do it. So without much further ado, let's go ahead and dive right on into it. We're going to be looking at a multitude of charts today, starting off with the S&P 500 chart. Then we're going to look at the gold chart and the massive rally that we have seen following the gold breakout above 2,000, then above 3,000. Now we're pushing up towards $4,000 an ounce. Then we're also going to be looking at the Bitcoin over gold chart and the gold over Bitcoin chart to hammer home our point that Bitcoin is the best performing asset in the history of mankind, and we are going to see a massive rally on it very, very soon. All right. Let's get started. First thing I want to go over is the recent movement on Bitcoin. As you can see, we are still in the process of forming this inverse head and shoulders pattern that we've been discussing for the last few weeks here. I want to clarify something that I said yesterday. I was in a hurry when I wrote yesterday's title, and I said that we called this correction. And I want to give a bit of a retractment there. What I should have said is that we talked about the invalidation level of about 115,000, and if we broke below this uptrend, then a correction would take place on Bitcoin. We are expecting a major rally up to about $130,000 in the next 3 weeks or so. So I suppose saying we called it isn't exactly accurate, and I want to apologize for that because I don't intend to clickbait you guys. I just got into a bit of a hurry. What I want to mention here, though, is that we talked about the invalidation level about dropping below 0.5, rejecting off of 0.618, and falling below this uptrending level of support, and that would possibly lead Bitcoin back down to 112. So while I wouldn't say that we exactly called it, we did talk about how a break below this uptrend would be a catalyst for a correction, and that's where you should be putting stop losses. And that's exactly what we did, and that's exactly what we encourage you to do. Now, from this point in time, I believe that Bitcoin is going to have a major reversal, and it's going to go into a large uptrend. But that is something that we need to see confirmation of because we don't see it yet. We fell below the 20 daily exponential moving average. We've been largely trading sideways for the last several months, and we have dropped back down to $112,000. Bitcoin needs to get a strong bounce off of 112, or else we're going to break it, and we're going to fall back down here to test this uptrending level of support here at approximately 110,000, where we see a large number of buy orders over on the order books right now. If 110 breaks, then that means that most likely this entire uptrend right here was one big bear flag, and instead of going straight to 130 in the middle of October, we might drop back down to 100, in which case we would start having to wonder, is the bear market starting prematurely? Probably not, but we would almost certainly bounce from there, from all of that correction, and then go into a major uptrend. This is something that I'm taking very, very seriously right now, this possibility, because as we are close to that invalidation level, let's see if we can find a clean-ish chart to draw this. As we get close to this invalidation level right here, this would basically form a head and shoulders pattern, which would give us a pretty scary price target, honestly, which you can see right here, pointing down at $90,000. Could this be the cause of a short-term drop down to fill the CME futures gap down at 92? Possibly, although that doesn't really line up with cycle theory. That just also doesn't really line up with what everyone is expecting out of Q4 this year. So I don't exactly think that's going to happen, although it is a possibility that we want to keep on our desk, and we want to keep in mind if we break below this uptrending level of support, then a drop back down to $100,000 becomes increasingly likely. So if we drop below here, this would be a great place to put stop losses if you are in a uptrending, in a long trade, betting on an uptrend. Now, all of that to say, the short term is looking significantly more bearish than it did a few days ago, but the longer term formations on Bitcoin are just getting more and more bullish by the day. And to build this argument, I'm going to start out by looking at the United States S&P 500. Now, this is going to be a bit depressing because when you look at this chart, it looks absolutely parabolic. It looks like the S&P 500 has been on just one of the largest tears in the last 15 years that you would ever see. The unfortunate bit is that if you go back to the beginning of the century, roughly January of 2000, and you extrapolate to today, you're going to see that the United States S&P 500 is only up approximately 345%. That's pretty sad. Now, it just so happens that that is at the beginning of, that's drawing from the very top. There's a peak right here at the Y2K event. And so if you even drew a little bit lower, you're looking at maybe 400, 450% or so. Now, when you reinvest dividends, that goes up slightly, and you might be looking at 550 to 600% return over the course of this century so far on the S&P 500. However, that pales in comparison to what we've seen happen on gold. Gold, for the last 25 years, ever since the turn of the century, has rallied to date over 1,100%. It has more than doubled what the stock market did. Gold built this massive cup and handle formation, which all technical analysts should be able to recognize right here. And this cup and handle formation has been pointing gold in the direction of well over $3,000 for some time now. And it's doubled the performance of the stock market. So the thing that we can already ascertain here is that more or less, ever since the fall of the Soviet Union, we have seen trust erode from the United States government, from the United States dollar, and from the United States Treasury. This, in turn, has led to the erosion of trust in U.S. Treasuries. If you look at the Treasury rates, in fact, I'll just pull it up. If you look at the Treasury rates, you'll see that the rate that the market demands for U.S. 10-year Treasuries, for example, has gone up dramatically, especially ever since COVID, because you've seen a multitude of different factors that have led people to not trust the government. So 9/11 happened. People didn't trust the government for that because they thought it was a cover-up. You have 2008 happen. People don't trust the government because of poor banking regulation. You have COVID happen, and people don't trust the government because of the mask mandates. And so you see the 21st century is very much characterized by a shift away from we don't trust the Soviets to we don't trust the Americans. And so, at least the American government. And so that's led, ever since the COVID-19 pandemic, this very delayed increase on bond rates because people don't trust the treasuries. And so the reason that that's important is because it's driven a lot of people away from investing in U.S. stocks straight into investing in gold. There's a general trend over the course of this century that trust in the United States government and trust in institutions in general is going down. And as trust in institutions is going down, that leads people to invest in things that are trustless. Well, it just so happens that gold does not require trust and Bitcoin does not require trust. Now, there is a varying degree to that. Gold does require trust in the sense of you're probably not self-custodying it. People tried that in the 30s and FDR stole it from them, right? So most of the time, people are custodying it in a Swiss bank account. They're custodying it in New York City. They're custodying it through an ETF, and they have no idea where it's custodied in the first place. But the point is, there's a custody issue there. But the other point, and the more important point in this case, is that people are not trusting the government anymore, and they're trusting hard assets like gold significantly more. This also explains why we've seen just an absolutely enormous real estate boom over the course of this century, because people are moving in the direction of hard assets. And so when you can get ahead of the trend, that's when you make money. And people that got ahead of the trend and started trusting hard assets instead of soft assets, such as the S&P 500, the dollar, bonds, etc., a lot earlier ended up making more money. The first quarter of this century has shown us that trusting hard assets is a viable winning economic strategy, investment strategy, and it does pay dividends. I suppose only metaphorically. I'm sorry, I had to. Okay, so here's the point I want to make. If gold is outperforming the S&P 500, then how do we beat gold? Well, it's very interesting because there's a chart I want to show you, and this chart is BTC XAU. BTC XAU. This is the chart of Bitcoin over gold. Now, it looks a little bit like the Bitcoin over dollar chart, right? If you zoom out, it looks similar, right? It looks similar, right? This is the Bitcoin over dollar chart. This is the Bitcoin over gold chart. But you notice there's one striking dissimilarity, and that is that Bitcoin is actually not higher right now on the Bitcoin over gold chart than it was back during the 2021 peaks. People have wondered, why hasn't Bitcoin gone parabolic up to $250,000 yet? That's because the base for gold, for Bitcoin, is not really the dollar. It's actually gold. Bitcoin is not competing with the dollar. It far outshines the dollar. It's competing with gold. And so Bitcoin has been on this upward march against gold, but gold, as it goes, has performed very, very well. But if you flip the script and you look at XAU over BTC, which is gold over Bitcoin instead of Bitcoin over gold, it's the inverse, you can see that the price of gold in Bitcoin asymptotically approaches Zero. For any of you that don't remember what an asymptote is, in traditional mathematics, when you have an equation that produces a line that gradually approaches but never actually reaches zero, but it goes like this, falls straight to the floor, and then just kind of curves along the ground, that's an asymptote. We are asymptotically approaching zero in the price of gold over Bitcoin. That is because Bitcoin in the long term outperforms gold by a huge margin. Well, you might say, well, Jeb, of course that makes sense. Bitcoin used to be worth absolutely nothing. Gold was worth absolutely everything, and that has changed, and Bitcoin now has about 10% parity with it, as you can see over here on flip.gold, for example, which, if you'll notice, this is literally the exact same chart as this. See, this whole flip.gold thing, this entire website is literally just BTC over XAU. So if you zoom in, all right, well, if you zoom in, let's just do this. Let's take a look at the Bitcoin over the gold over Bitcoin chart for the last 5 years. It's still, if you draw a 20 monthly moving average, that moving average still is asymptotically approaching zero. Gold is losing value on the long term against Bitcoin, no matter what the short term says. Gold can double in value, and it doesn't matter because Bitcoin is still outperforming it in the long run. If you come down here on flip.gold, for example, you can see the price performance of Bitcoin over the last 5 years, plus 973%, gold plus 98%. Past 3 years, 480%, gold plus 121%. So here's the point I want to make to you today. Over the course of this century, trust has evaporated in government institutions. That said, the stock market has still seen absolutely enormous growth. However, wise investors over the last 25 years have decided to buy gold instead of the S&P 500 because they saw the degradation of trust in institutions, the Federal Reserve, the U.S. Treasury, and the U.S. dollar taking place. They saw it coming from a mile away. I remember being in 8th grade and the U.S. national debt was $14 and $16 trillion. Now it's $37 trillion. I've been watching this since I was 10 years old happen in real time every day. I've seen this coming for a very long time, and as soon as I had money, the first thing I started doing was buying hard assets. At 17 years old, I was using my dad's Coinbase account that I made for him so that I could buy Bitcoin for our family. So, trust is eroding in the U.S. government. Trust is eroding in the United States dollar. That has led to an erosion in trust in the S&P 500, which has led to a movement in the direction of gold. You see the natural progression here, away from fiat soft assets towards hard assets. So what we end up doing right now is that we look at, did I just stop recording? No, I didn't. Okay. Sorry, my little switcher over here messed up. What we see is a shift away from the S&P 500, away from stock investing, away even from real estate investing into gold. But what's the natural progression? Well, the natural progression is to go from soft assets to hard assets. This does not mean that Bitcoin is failing. This does not mean that Bitcoin is failing. This proves us that it's not. Bitcoin is the harder asset than gold. We are undergoing a half a century shift in global economic policy and investment policy away from investing in soft assets such as the dollar and the dollar-denominated stock market towards investing in hard assets. And anyone who did so in the last 25 years, either from the beginning of the century in gold and from 2009 and on in Bitcoin and held for a few years, like you have to do with any investment to make money, they outperformed. Gold is doing very well as a symptom of the problem, which is that the dollar is no longer trustworthy. The United States federal government, no matter who is in power, is no longer trustworthy. People do not trust the government. They're moving in the direction of hard assets. Most people that have a lot of money are in their 50s, 60s, 70s. They don't understand Bitcoin. The younger cohort of people, like myself and like many of you guys, 20s, 30s, 40s, 50s, understand Bitcoin. And as we move on, we are entering into the prime earning years of our life. 25, 35, 45, 55. The economics is shifting in the direction of the youth that understands Bitcoin. It is the boomers that are predominantly buying gold. It is younger people that are doing a few things. Number one, they're buying Bitcoin. Number two, they're learning how stupid it is to sell it, so they're becoming less prone to swing trade it, and instead they're becoming much more prone maybe to day trade with a trading account. But as far as investing is concerned, they are just sitting on it for 15, 20 years like we are. We have a no-sell Bitcoin policy until 2040 for that reason. And so We are about half of the way through. This has started in about 2000. It's going to take until about 2050. It's 2025 right now. We are about half of the way through a global economic shift away from soft assets to hard assets. You just saw this morning that China is going to try and become basically the world vault for gold, competing directly with the United States because they understand that gold and hard assets are the future. And so for me, I have always, since the very beginning of my investing career, when I was about to turn 17, I invested for the first time in Litecoin. I was 16 years old. Bought Bitcoin at 17 years old. From the very beginning of my investment journey, I've been a hard assets kind of guy. And I'm going to continue doing that because in the world that we're moving into, gold, land, guns, food, water, and most importantly, Bitcoin are going to be the assets that will retain and grow their value the fastest. And so this can illuminate the shorter term dilemma, which is that why is Bitcoin not outperforming gold? That's because gold is not our enemy. It is our friend. And I, for one, if I see gold take a large dip, will probably start to acquire some in a gradual fashion. And I look forward to the rotation out of gold into Bitcoin. When gold takes a break, Bitcoin will absolutely enormously explode all the way up to $200,000 to $300,000 because gold has cleared the path. We got to let Big Dog run first, and we got to be humble enough to let him do it. But when he's done, it'll be our turn to eat, and it's going to be delicious. And Bitcoin as usual will outperform gold in the same way that altcoins, when they run, typically outperform Bitcoin. It's just the way it works. Gold is not our enemy. We need to stop acting like it is. We're friends with the gold community, although we personally believe that Bitcoin is the better hard asset. We also understand that gold is a hard asset as well. And so we want to pay our respects because Bitcoin is supposed to compete with gold in a friendly way to solve the same problem that gold is trying to solve, which is one of imperfect, soft money that is not capable of storing value into the distant future. And so that is why I'm not concerned about a drop down to 112 right now. That's why I'm not concerned if Bitcoin did drop all the way down to $92,000 and completely proves me wrong. Let's say Bitcoin completely proves me wrong. We don't go to 130 in mid-October, and we don't have an Uptober, and we don't have a Moonvember, and we don't have perfect Christmas where Bitcoin's at 250. Let's say that doesn't happen. That's okay, because it's coming. Every dollar, in other words, that gold goes up is good for Bitcoin. I firmly believe that Bitcoin will flip gold. So if gold goes to $100 trillion, that just means that Bitcoin can go even higher. So I'm very excited about what's happening on gold. Very happy for any of you guys that hold gold. I've met Peter Schiff. I'm very excited that he's making all kinds of money. Hopefully it doesn't go to his head. Hopefully he can understand that the Bitcoin market is an ally of the gold market in the same way that we understand that the gold market is an ally of the Bitcoin market. And hopefully that we can all participate in this global reshuffling away from fiat currencies, which are destroying our world, into hard currencies that are going to save our economic butts as we watch the financial world around us completely capitulate. Guys, if you want to protect your Bitcoin, it is very important, in my opinion, to invest in some kind of solution to self-custody it. And one of the things that I want to point out is none other than Stampseed. Now, Stampseed's a really cool product because it actually gives you a titanium sheet right here. And use this hammer that they send you, and you've got some dies, they're over here, and you can stamp your seed phrases into this sheet. Now, they never know your seed phrases because they just send you the hammer, the stamps, and the sheet, right? The titanium sheet. The reason this is important is because most safes, even in the event of a fire, it can get, even if they have an incredible fire rating, most safes will get up to 300 to 400 degrees in the event of a fire, which will destroy your paper seed phrases, even if the safe is fire rated to 1400, 1600, 2000 degrees, whatever. Your paper seed phrases are still probably going to be destroyed. At the same time, if you wanted to hide your seed phrases somewhere, hiding them on paper is not a very good solution because they have to be climate controlled, they have to be moisture resistant, etc. It is a phenomenal idea to stamp your Bitcoin into titanium. These things are basically impossible to pick up on a metal detector either, so they're very easy to hide. And they're also fire resistant. Of course, you can throw this in a 2,000 degree fire, pull it out, wipe it off, and you'll still be able to read your seed phrases. There are none on here because this is for marketing purposes, but they did send me one with my logo on it. So big shout out to Stampseed. Check them out, link in the description box down below. Really appreciate them and what they're doing to help spread awareness of self-custody. If you enjoyed today's video, make sure to hit that like button and subscribe to the channel. And before I go, I love you. And I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.